Okay, panelists, when you're ready. First off, thank you, Daniel, and good morning, everyone. By way of quick introduction, for those of you that don't know me, I'm Kenneth Jopin, the Registrar of Companies. I'm joined today by Ann Daniels, who's the Head of Compliance for the Registrar of Companies, Michael Frith, the Economic Substance Advisor for the Registrar of Companies, Ms. Venus Mamari, who is our Legal Advisor, as well as Mr. Daniel Rees, who's one of our Senior Compliance Consultants. As the agenda that was being typed and moving earlier suggests, today we're here to talk about economic substance. And prior to, I guess, me handing it over to our technical professionals to go over some of the detailed subject matters, I just wanted to give you a brief update on where we're at. We've now had the benefit of the first full year's filing, so we're starting to note trends and see where things are developing. We know, obviously, that there's been some challenges with the economic substance portal, and we'd like to thank you for your patience in that regard. But as you can appreciate, while we're also implementing the economic substance portal, we have also been implementing the e-registration system. And so because of the technical overlap between those two systems, we know there have been some challenges, and we'd like to thank you for your patience in that regard. Some of you may recall that earlier in previous outreaches, we had spoke about upgrades specifically to the economic substance portal. And I know there was some concern or interest as to when those upgrades would take place. Those upgrades are still ongoing. We've been very slow and very deliberate about these changes. And a lot of it has to do with our current interaction with the OECD. In so much as the economic substance regime is equally unfolding for Bermuda, it's also equally unfolding for the OECD in terms of implementation. And so what we're finding is that, I don't want to say the goalposts keep moving, but the expectations of the data that we gather and the type of analysis we perform keeps getting updated as the OECD refines the process. So consequently for us, that means systems changes. And so we've paced ourselves such that we only make a minimal amount of upgrades and minimal interruption to the system as possible. So those things are very much still in train. And as we get further into the agenda, I'm sure Ms. Daniels will touch upon some of those changes that are planned. Some of you may also be aware that speaking of the systems, we've implemented a working group to identify issues and necessary enhancements with our e-registration system. And while we haven't formally done one for the ES segment of that system, the ES portal, we do welcome your feedback, and we will revisit whether or not we pull that into the process as we go along. That being said, and that's a very high level introduction, a very high level overview. I'll turn you over to Ms. Daniels, who will lead you through the rest of this discussion.
It would help if I unmuted myself. Good morning, all. First, I'd like to do some little housekeeping. You can ask questions at any time by typing them into the question and answer portion of the session. After the presentation by Michael, I will open up to questions before I move on to speak about filing issues. We'll endeavor to respond to questions during the sessions, but we'll address any themes that we have not addressed in an FAQ document. I'm sure people will have lots and lots of questions. Please don't ask entity-specific questions. We don't want to compromise your entity, and generally it's not appropriate for us to give specific advice to entities. Another thing, George is not here. So if there are specific system issues, I will not be able to help you there. I'll address a few system matters that specifically relate to the filing of an ESD, but on general questions with the e-registry system, I am not equipped to answer. I'll turn it over to Michael now, to address some of the interpretation matters that we've seen in filings.
Okay, thank you, Anne. Good morning, everyone. Just wanted to go over a few fairly broad themes. Nothing, I don't think anyway, nothing particularly revolutionary about any of it. Indeed, these are concepts and themes that have been in place since the regime came into force. But what we've observed, or the ROC team has observed during the course of filings being received, is that there appears to be some misunderstanding from some industry participants anyway, regarding some of the key technical definitions in particular. So you see from the agenda there, there are four broad themes which I'll go over right now. If there are other questions, as Anne indicated, that you have in terms of general interpretation, specific technical issues in relation to the legislation or the guidance, please do add those to the Q&A. And we'll seek to address them. But broadly speaking, what I'll go over today is just a review of the definition and the application of it in relation to pure equity holding entities, local entities, non-resident entities, and particularly in relation to the application of the analysis in relation to tax transparent entities, and also just a quick discussion about entities that are in liquidation. So starting with pure equity holding entities, certainly in my experience, this is an area that is both of probably the broadest particular interest to entities, in the sense that it is a fairly common relevant activity, and it's a fairly common interpretive issue. The key point here is that the concept of a pure equity holding entity shouldn't be confused with the very general concept of a holding entity or holding company. We all know what a holding company is, say broadly speaking, holding company, investment holdings, and those are principal business activity choices, broadly speaking, that can be made on the annual declarations that the companies and partnerships make in relation to their business generally. But the pure equity holding entity definition is very, very specific to economic substance. So it's really just a reminder of that. The key characteristics that have to be met in order for an entity to be a pure equity holding entity and subject to the reduced substance requirements related to it are essentially twofold. The first is that they must hold a controlling equity stake in one or more other entities. So, for example, a holding entity that held only minority stakes or held debt interests and not equity interests, those would not fall within the definition of pure equity holding entity. So it must be, broadly speaking, a controlling equity interest in one or more other entities. So that's criteria number one. The second criteria, which is the one that seems to have tripped a few people up along the way, is that the pure equity holding entity must not carry on any other commercial activity. And broadly, what that means is it shouldn't be earning revenue from any other activity other than simply the holding of the equity interest that it does. If the entity is carrying on another commercial activity, and that commercial activity is itself a relevant activity, then the entity will be in scope for that other relevant activity. It isn't possible, because of that second limb of the definition, it's not possible for a pure equity holding entity to be carrying on another relevant activity, because by definition, they would be carrying on another commercial activity. If, on the other hand, the commercial activity that's being carried on is not a relevant activity, that would take the entity out of scope altogether. So it may hold a controlling stake in one or more other entities, but if it's carrying on another commercial activity and that other commercial activity is not a relevant activity, then the entity will be out of scope and not subject to the economic substance requirements. So to say, just a reminder of that. It is a very particular definition, and I know conceptually the concept of holding entities and investment holding entities sort of well understood as a commercial concept, but the economic substance definition is particular. So if you have any questions about that, please do let us know. And if not, I will move on to,
Michael.
sorry, yeah.
Michael, somebody's asking a question. If a holding company holds an asset which does not generate revenue, for example, real estate, does that not still disqualify it from being a pure equity holding entity, since its sole function is not to hold controlling interests?
It's a good question, certainly in relation to whether or not the holding of the real estate asset generates revenue or not. I think my starting principle, and obviously it would be very fact specific, my starting principle is that if the real estate is being held, whether or not it's earning revenue, but is being held for a commercial purpose, I would argue that would constitute another commercial activity for that pure equity holding entity. But as I say, much would depend on the other circumstances as to whether or not specifically it would in or out of scope. But it's a good question.
Does that answer your question? Joseph?
Okay. Say if there are follow-up questions, happy to address those. If not, I'll move on to local entity. This is another one, I'll say with a smile on my face, is a concept that everyone thinks they understand, and indeed, as a local company construct, it is well understood. But local entity, as a defined term within the Economic Substance Act, is again very particular. And this is one that we have observed. There are a few entities for whom they believe themselves to be a local entity because they are themselves for example, local company, as defined in the Companies Act. But because they don't meet one or more of the other elements of the local entity definition for economic substance, they are in scope for full economic substance. So I'll just go through that quickly. In order to be a local entity for economic substance purposes, there are three requirements that have to be met. The first is that it must be a local company, a local LLC, a local partnership that is subject to the 60-40 Bermudian ownership and control requirement. Or in the case of a partnership without legal personality, or a partnership that did not have any non-Bermudian partners. So the companies and LLCs, but it's subject to the 60-40 rule, and that is subject to the 60-40 rule. There may be a local company, but if they have a 114B exemption, for example, to vary that 60-40 Bermudian ownership requirement, they would not meet this element of the definition. They must be majority owned and controlled by Bermudians. The second element is that they must only carry on business in Bermuda. So if you have a company that is carrying on business outside of Bermuda, again, it would not meet the local entity definition. And then the last piece, which is probably the most technical, but can be boiled down, I think, fairly simply, is that the entity must not be part of an MNE group. And the important point to remember here is that MNE Group, in the context of economic substance, has a different, slightly different, but important different definition to that seen in the International Cooperation Tax Information Exchange Agreement, the country by country reporting regulations of 2017. So the MNE Group, for those of you who are familiar with the country by country reporting regs, will understand that broadly it means where you have a group where one or more entities have different tax residency, and where the revenue for the group crosses over the 750 million euro threshold. So the key difference for the economic substance definition of MNE Group is there is no revenue threshold. So what that means is that if a Bermuda company has an affiliate or branch outside of Bermuda that is tax resident in that jurisdiction outside of Bermuda, it will be deemed to be part of an MNE Group, which means that it would not fall within the definition of local entity for the purpose of the Economic Substance Act. So you do need to look at the definition of MNE Group, which is specifically defined in the Economic Substance Act, basically cutting out that revenue threshold distinction. But otherwise, you're looking to the CBC regs to determine whether or not it's part of a group. And and whether it meets the other elements of that MNE Group definition. So key point, if the Bermuda company has a branch or an affiliate outside of Bermuda that's tax resident outside of Bermuda, it would not meet the local entity definition. So just to recap, local entity must be subject to the 60/40 ownership for companies and LLCs and not have a non-Bermudian partner for partnerships. They must be carrying on business only in Bermuda, and it must not be part of an MNE group as defined in the Economic Substance Act. So just wanted to clarify that. If there are no questions on that specifically at this stage, I think we can move on to the non-resident entity analysis. Certainly this one created a lot of interest when we brought it into the legislation and originally. It's caused a lot of interest and some angst in relation to providing evidence of how you demonstrate that an entity is a non-resident entity. I won't talk very much about the type of evidence. The primary issue I wanted to talk about, simply because it is relevant to the change that was just recently made to the economic substance legislation, which is bringing in partnerships without legal personality. And that is the application of the concept that is in the guidance notes currently about tax transparent entities. So one of the things so taking a bit of a step back, the concept of a non-resident entity is broadly put that an entity that has all of its income from a relevant activity liable to tax in another jurisdiction shouldn't be required to meet economic substance in Bermuda because it's liable to tax elsewhere. That same principle applies where the entity is tax transparent. So if all of the income from the relevant activity of that entity is attributable to one or more of the partners or shareholders of the Bermuda company, so all of the income of the entity is attributable to either all of the partners or some of the partners of the entity, and those partners and owners are liable to tax in a jurisdiction outside of Bermuda, then if the entity provides evidence of that, it will qualify for the non-resident entity designation. So they will be out of scope for meeting the economic substance requirements. But the key point here is, and the reason I sort of stated the broad principle at the outset, is that it must be all of the income from the relevant activity must be attributable to the partners that are liable to tax in that other jurisdiction. It can't be a portion of it, even if it's most of it. It has to be all of the income in order for it to be to qualify as a non-resident entity, just as in order for the entity itself to make a claim for tax residency elsewhere, all of its income would have to be liable to tax in that other jurisdiction. So say just a point of clarification, and hopefully also a point of dare I say calm in relation to those partnerships that have found themselves being brought into scope as a result of the recent amendments, where they are genuinely and fully tax transparent. There shouldn't be too much of an impact in terms of what they have to demonstrate in terms of meeting the economic substance requirements, provided that they can show that evidence of their income being attributable to the partners and those partners being tax resident elsewhere. So to say, just wanted to cover that one fairly technical point. I note there is one question that's come up in the feed there. Just give me a second.
It says, what if a holding company also provides intercompany loan? Would it fall out as a PHC and be seen as providing a financing service?
Okay, so yeah, that's going back to the pure equity holding entity discussion, and the answer to that is yes. If it is carrying on an activity that would constitute financing and leasing, then it is in scope for financing and leasing.
And the tax question here is, what is the rationale for allowing a Bermuda subsidiary of a U.S. company, which is fiscally transparent for U.S. purposes and taxed in the U.S., to be treated as not resident, but not a Bermuda subsidiary, which is subject to US tax under anti-deferral rules like subpart F for guilty. Is it just difficult to prove as an evidence matter? That's a very specific question.
I think the last part of that question is probably the key point. Yes, it is just difficult to prove as an evidence matter. Without even attempting, and I will not attempt to provide any analysis as to what subpart F or the guilty analysis does. What I do, because I'm a lazy Bermuda lawyer who is quite grateful for the fact that he doesn't have to advise on tax, is just look at the principle. And the principle is all of the income of the entity liable to tax in another jurisdiction, and can evidence of that be provided? So whatever mechanism and whatever the tax code is in that other jurisdiction that would result in it being able to evidence that all of its income from its relevant activity is liable to tax in that jurisdiction, that should be provided. And if it can be, and it's clear on its face that that's what it is, or it's as clear as it can be, then it should receive the non-resident entity designation and be out of scope. But the key is you just have to be able to evidence, and that's why I say the last part of that question is probably the key, the real part of it, which is that it is just difficult to evidence. But provided you can provide that evidence, then you'd be out of scope as a non-resident entity. So I don't know, Robert, whether that answers your question.
It says, so if there are shared tax holders, US in the majority and non-taxed shareholders, Bermuda in the minority, the company can't be tax transparent, correct?
It isn't so much a question of whether there are tax shareholders and non-tax shareholders. It's a question of whether all of the income of the entity would be attributable to the taxed shareholders. So that is the analysis that you have to go through. Is it all of, so I recognize that there may be circumstances in which all of the income from the entity is attributable to a single partner because of the tax code of that partner's jurisdiction. And if that's the case, but it has to be all of the income. If it was an apportionment of the income between those tax shareholders and the non-tax shareholders, then no, it would not be a non-resident entity. Okay. Happy to answer any other questions on that, but in the meantime, just go over very quickly the question of what happens when an entity is in liquidation. The guidance notes do address this very simply by stating that an entity that is in liquidation remains subject to the Economic Substance Act until such time as it has been liquidated. So until it is in fact wound up, it will continue to be subject to the Economic Substance Act. And if during its liquidation, it continues to carry on a relevant activity or did carry on a relevant activity at any point during that period, then it will continue to be subject to it. And will continue to be liable to make economic substance declaration filings for so long as it is not wound up. And so what that means is, from a liquidator's perspective, when they assume responsibility for the entity from the directors, and once they're appointed as liquidator, they then effectively take on the responsibility of ensuring that the economic substance declaration does continue to get filed for so long as the company continues to exist. It's only when the company ceases to exist altogether, it has been wound up, that is the only point at which its obligation under or ceases to exist in Bermuda. The only point at which its obligations under the Economic Substance Act would cease. So for so long as it is in liquidation, it will remain subject to the Economic Substance Act, must consider whether it's carrying on a relevant activity and therefore whether it needs to continue to file an economic substance declaration. So not sure if there's any questions on that point in particular. I see there's a question, what about a company that has been redomiciled outside of Bermuda? Conceptually, it's a very similar analysis. Once the company is not in Bermuda, then it is not subject to Bermuda law any longer, and therefore would not be subject to the Economic Substance Act. It is something that the registrar will look at as the company is seeking to redomicile, whether or not past filings have been made as appropriate. And then clearly a fairly specific question: if an entity was dissolved on a specific date in 2021, would it need to file in 2022 for the year 2021? Again, if the company doesn't exist any longer, it no longer has an obligation because it doesn't exist. It doesn't exist under the Bermuda law. It is not therefore subject to Bermuda law. It wouldn't be brought back onto the register in order to make a filing. So if it has been dissolved prior to the deadline for making a filing, it would no longer be subject to making that filing. Doesn't mean, and this is important, it does not mean that it would not have been subject to the economic substance requirements until the point at which it dissolved. And if in previous filings or based on other information found by the registrar, it was found to have been non-compliant and subject to a notice to comply, at least in principle, that is something that the registrar could take up with the company, with the former directors of that company. So. Okay, I don't have any other broad topics to discuss in terms of interpretive issues. If there are any others that any of the attendees might have as we're talking through other things, please do type them into the Q&A. We'll try and address them now or subsequently. There will be 2 further sessions that we'll be conducting later this week and next week. And so we may be able to take up those questions later. But otherwise, I will hand back to Anne to go over some of the system and technical issues and filing errors.
Thank you so much, Michael. I'm sure lots of you have seen, have had fun trying to make filings. We are aware of some system issues which have affected your ability to make an economic substance declaration. Those entities might have done everything they can with the authorization and getting access to the registration system, but are still not able to make filings. We are aware of these. These are entities with multi-currency shares, SAC cells that have to file ISACs, and a few entities that failed to come over in the migration from one system to the other. For the most part, we're already aware of each of these entities, and we are arranging for them to make paper filings for this period. These are not entities that will be penalized for late filings. It's our system issues are not your system issues. Always be aware that we're not looking to penalize you unnecessarily. For all other entities, however, filing before the extended deadline will be seen as a late filing and subject to penalty. We've had 6 months from the year end to make this filing, so it's a little difficult. We have accommodated for our system issues, and so we hope that you would make every effort to make your filings on time. Access to the economic substance declaration. Before go live of the e-registration system, access to the e-registration system had its own, economic substance declaration had its own authorization process and was separate from the e-registration system. Now with the go live, the economic substance declaration is just seen as another filing under the e-registration system, and so access to conduct and to fill and make an ES filing is through the access process. So anyone who last year was able to get authorized and sign an ES and fill in an ESD without accessing the rest of the register now has to go through the full authorization process and be authorized to fill out the ESD. Just wanted to be sure of that. If you cannot see your past economic substance declarations, it's likely that you don't have the correct authorization, and you need to check to make sure that you have that authorization. Everybody understand? Any questions on the authorization? Okay, great. Authorization verification. this is something that I think is causing people some problems. Because of the sensitivity of the information available via the e-registration system, which includes now the economic substance information, which is it's particularly sensitive information, it's our responsibility, the RSC, to ensure that access to that information is restricted only to appropriate authorized persons. That's why we are conducting 100% verification on the authorization process. What we did in an effort to move the go live forward faster and to enable people to access the system in order to make filings, etc., we delayed the authorization from the entity to the corporate service provider. We delayed providing evidence of that, and we're doing it by 100% verification post registration, post authorization. So what this means is that you will be getting at some point a request for to provide the documents that have authorized you to act on behalf of the entity. These can be generally the service agreement, if it's a corporate service provider, or resolution if you are conducting a business for a group, et cetera, et cetera. Whatever authorization documents have been put in place to authorize an entity or a person to conduct activity on the registrar company's registration system is what we're looking for. You'll appreciate that it's about 15,000 on the register. This process will take lots of time. If we had tried to do this before go live, which would have meant a shutdown of the system for a lot longer. We're doing this retrospectively with the goal of ensuring that only the proper people have access to the system. Once the entity has authorized a corporate service provider or somebody else, it is that person who will then have to authorize others, and it takes the responsibility out of the registrar's hands. It should be something that you manage within your shop very carefully, because we will not be responsible for breaches that have been through entities themselves. Another filing issue that we've seen is document limit. Currently, there's an inability to upload more than one document to the economic substance portal. We are aware of this, and it will be amended and addressed in future changes. But again, since we're trying to make our changes efficient and effective and not have to do them all the time, we will do a wholesale change, and this is one of the issues that will be addressed. Until then, please send additional documents to the ROC compliance box, and note in the notes section that you are doing so. Any other system questions that have prevented you from filing? Okay, I see a question here. It says, we filed the ES declaration on 29th of July. However, the filing date as per the declaration on the portal states 2nd August, which looks like a late filing. Is this the date that it was reviewed? One of the things that you should be aware of is that because the system anticipated a filing date that was not extended. And accordingly, if post the appropriate filing date, every submission has to be reviewed in order for the email to be sent out acknowledging receipt. As we extended the filing date, that the change to the system that did not allow the generation of that message did not change until has only recently been changed. So it will look as if the review date was the date received. We are fully aware of the actual date received. Please do not hesitate. We are not, again, trying to be punitive. Filing a day late is, or in the middle of the night is still acceptable. We're not looking to penalize you for a 5-minute late filing. Question here, are individuals specifically authorized for ESD filing able to access, view, edit the balance of the items on the site for the company? That's yes. If you have access to the e-registry, you have access to all of it. It says we have clients that did their own ES filings last year. Now they want us to file on their behalf as a CSP. Can we deactivate the accounts they set up last year, given that we now have authority of the filings as a CSP, and will future ES declarations be under our corporate account? The question, what you'll have to do is whoever had authorization, the entity will need to authorize you to do it. And thereafter, then you will be able to see any ES declarations under that entity, under that entity's corporate account. I think that's all the questions on that. Next one. So now let's get to actual issues we've seen and things we've noticed as people are making filings. First thing I want to make clear is the finality of a submitted economic substance declaration. We've had numerous requests to reopen the economic substance declaration because the filer made an error before they submitted it, once they submitted. Once you've submitted, an economic substance declaration is binding legal submission and cannot be changed. So please check and make sure you've got in it what you want to be in it before you press submit. If you've made an error before you submit, you can correct it. But once you've pressed that submit button, there's no going back. Okay. What if you've submitted an economic substance declaration with errors? If you realize you've made an error, please notify as soon as possible by email through the ROC compliance mailbox. We do not encourage using this, but we prefer to be notified of errors as soon as possible. Sometimes you want us to know additional information, something that's not represented in the fields in the economic substance declaration. We are making changes to the economic substance declaration itself, so there will be more fields, more information that you'll be supplying. So this may become a moot point, but at this stage, if you want something, want us to know something, and it needs to be something very, very relevant and important to the declaration, you can put that information in the notes section. There's a character limit, so please ensure that you're only putting stuff there that's really, really, really important. Always be sure to try to fill out the declaration as best you can with the information that you want us to know about in the first instance before you press that submit button, because it's not easy to make changes. Okay. There are another issue you've come across is where entities who are conducting more than relevant activity, for one of the relevant activities, they've had nil gross revenue. We're aware that when an entity conducts more than one relevant activity, but one of those relevant activities has not had any gross revenue for the relevant year, if you record that relevant activity first, the system will not allow you to record the relevant activity upon which you have generated income. We're aware of that. Please, in this instance, there should not be too many of these instances, but where this happens, please first put in the information about the relevant activity that has gross income, gross revenue, and note in the notes section that you are unable to fill in the information for the other relevant activity because it had nil gross revenue. We will then come back to you if we need to find out more information. But we are aware of that issue. We don't believe it affects too many people, but it is something that we will fix when we make the changes to the portal. Another thing we've noticed is there have been quite a few what we call false declarations of compliance. You notice where sometimes the entity will say that they have no full-time FTEs in Bermuda, or they have no premises, or they have whatever they don't have. they'll document that in that section of the economic substance filing. But then when it comes to the declaration at the end, where it says, I declare that I have complied with all the requirements, etc., they say that they have complied. Once you have not complied with one or more of the economic substance requirements, then you are not in compliance. Okay. Evidence of tax residency. When you're supplying evidence of tax residency, the evidence must reflect the year under review. It doesn't help us if you've got a tax filing or a tax authorization from a couple of years ago. We realize that in some jurisdictions, you're required to register as a taxpayer, but you're not required to pay tax. I think it's in Hong Kong, unless there are certain circumstances. Where you have not filed a tax return in that jurisdiction for that year because you have not met thresholds, we need to be able to you need to be able to certify to us that you've not met those thresholds. So it's not just enough to say, yes, I'm registered to pay tax in that jurisdiction. You have to demonstrate that either you filed the tax for the relevant year, or you did not have to file because you did not meet whatever thresholds you're required to meet. Okay. I believe that's the majority of what I had seen through filings. If there are other questions, let's see. The ESDs need to declare certain information such as premises of Bermuda, holding entity, etc. If there have been multiple changes to these over one financial period, how should this be declared? Presumably, one should be reporting the position as at the end of the financial period. Yes. The goal is to the information that you provide should reflect what the status is at the time of filing. If it has changed drastically between the time of filing and the year end, you can note that in the notes, but generally we assume that if that entity is continuing its activity, then we shouldn't have changes that would adversely affect the ES compliance. Michael, are you able to provide further guidance on that?
I mean, yeah, you're right. The information that's provided is as at the end of the financial year. It doesn't change the fact, that the evidence has to have been in place, whether it's changed or not, as in compliance has to have been in effect throughout the financial period. But the data, the information has to be as at a particular date, and in this case, it would be as at the date of the end of that relevant financial period. Just as financial data is reported as at the financial year end. Just addressing and providing a bit more detail on the tax residency evidence in particular. So, and I've certainly have seen this question come up quite a lot, and I expect you and the team have also. The difference between being able to provide, for example, so the entity itself providing its tax filing. So they provide a copy of their tax return, for example, to evidence that they are resident for tax purposes in that jurisdiction. That, in accordance with the guidance notes, could constitute sufficient evidence to grant a preliminary assessment of non-resident entity status. But in order for the entity to get a final determination of non-resident entity status, the evidence has to be something provided by the taxing authority. So, simply put, a tax residence certificate issued by that authority. And the registrar, I don't think I'll be speaking out of turn to say, is very sympathetic to the fact that those things are by their nature very bureaucratic and therefore by their nature can be slow to be produced. But in order to get that final claim of non-resident entity status, it does, because this was a requirement very clearly set out by both the EU and the OECD. It does have to be objective evidence issued by the taxing authority as opposed to evidence provided by the entity. So just to clarify that point. And so, I see there's a question there, what happens if a tax filing for the prior year has been made, but the current year filing to the tax authorities is not yet due? The answer there is, what's important to the registrar is, has that jurisdiction accepted that entity as being liable to tax in that jurisdiction, whether or not it pays tax. It doesn't have to pay any tax necessarily if the rules of that tax jurisdiction, for whatever reason, have determined that it doesn't need to for that year. It has to demonstrate that it is liable to tax in that jurisdiction. I see there's a question, if financial information is not available for 2020, what information should be given? Can it be reasonable estimates or older information? I think I'd be a little bit concerned if there were entities that don't have current financial information, is my starting kind of school teacher response. The answer is it does have to be current. Any information, whether financial or otherwise, that's submitted as part of your economic substance declaration, you should, in fact, you must be able to back up with documentary evidence. So yes, ultimately, the data that you're putting into the ESD portal is data that you've taken from another source and input into the portal. That's understood. There has to be the evidence, the documentation backing that in the event that the registrar seeks to verify the data that you provided. And that would be true in respect of any information, financial or otherwise.
Another issue that we've seen is that a couple of countries have claimed residents in a country, but that country is blacklisted. It's interesting because, again, the issue for us is as at the financial year end where your tax residency is, and if that, we've had a couple of instances where during the year the country was blacklisted, but it subsequently came off the blacklist. If that's the situation, then that's fine. But you should always check to make sure that the country that you are claiming tax residency is currently not on any blacklists. That would be very helpful. I do not see any other questions, and I believe we have answered all 23 of them. At this stage, we have quite some time to give back to you, which I know we're all looking forward to. So I'd like to ask Ken to close for us, and so we can move on to other things.
Close. I feel like I'm at a baseball game. Coming in to close it out. Now, I'd just like to say thanks to the team for providing informative information. Thank you, everybody, for your participation. I'd just like to emphasize the fact that we are accessible. So if you have any other questions that we have not covered here and you'd like to discuss offline, please reach out to Anne in the first instance, and we'd be happy to sit down and discuss individual entity particulars. But again, thank you, everybody. Thank you, Michael. Thank you, Anne. Good day, everybody.